You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Bupp has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Bupp.
Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. And our guest for this week's show is real estate and laundromat expert Brian Brunkhorst. Brian and his wife currently own and manage 5 laundromats as well as several other private business and real estate ventures. Additionally, in 2009, Brian also co-authored a book titled Seize Your Opportunities, How to Live Your Life Without Limits, and was expert panelist at the laundry industry's semi-annual Clean Show trade show and was elected to the board of directors of the Golden State Coin Laundry Association, where he now serves as president. In addition to his entrepreneurial ventures, Brian also devotes time giving back to others by speaking to kids in schools about being an entrepreneur, teaching educational classes around laundromat ownership, and helping others achieve their dreams through one-on-one coaching and mentoring. And so in today's show, our goal is to pull back the layers of Brian's business and take a look behind the scenes of the laundry industry, but more importantly, how to succeed and build a sustainable cash-flowing laundromat business. Before we get on to the show with Brian, just want to run through a few quick updates with you guys. First and foremost, if you're just tuning in for the very first time, you probably don't know too much about me or my business. I do not own laundromats, but we actually specialize in mobile home parks. And I bring this up because I will let you guys know that we are seeking mobile home parks to purchase. So we're kind of in buying mode. We're always in buying mode, but we're really, really actively in buying mode today. And we are very open to opportunities, okay? Joint venture arrangements, or even paying out big finder's fees for the right deals, okay? So if you guys are out there and you're on the hunt, maybe you're looking for apartment complexes or laundromats or self-store facilities or whatever it might be, if you run across a mobile home park opportunity or something that seems like it could be an opportunity that is at least 50 or 60 plus spaces in size, and you're either looking for a team to help you take the deal down, like maybe you can't do it yourself, you don't have the capital or the track record or a little bit of both, we can help you take that deal down, or maybe you just want to flip it and walk away with a big fat finder's fee check, which we've done many times. You can email me, kevin@kevinbupp.com. Let me know about this opportunity, and we can spend some time. We'll jump on the phone together and see if it might be there might be a chance of working together. We can handle deals upwards of $25 million. We've got a lot of funding that we have access to, and we'd love to do a deal with you. So just give you an idea of what that looks like today on our board, literally on our pipeline, or in our pipeline, we're about to pay nearly $200,000 in referral fees on 2 opportunities. So how would you like a big, fat $200,000 check in your pocket just for bringing us a deal, right? Sounds pretty cool. So if you got an opportunity, kevin@kevinbupp.com. Shoot me an email and let's talk. Next up, just wanted to give you guys an update regarding our mobile home park fund. Again, if you're a regular listener, then you'll know we recently closed out our first successful Reg D 506C offering, and really couldn't be happier with both the parks that we purchased as well as the many different investors that we've had the pleasure of partnering with in this first fund. But unfortunately, there were some investors that kind of came a little bit too late. Maybe that was you, and it was a little too late to get involved in that first fund, and we didn't have the opportunity of partnering together. Well, I got some good news because we're in the midst of rolling out fund number 2. Okay, we're putting together the final private placement and the operating agreement, and expect to have it rolled out sometime Q2 this year. And so if you missed out on that first fund and you have an interest in partnering with us on the second fund, please be sure to go over to our website, sunrisecapitalinvestors.com, and go ahead and create a free account inside our investment portal. This will basically place you on the first to know basis for when this fund number 2 rolls out. And based on the demand for that very first fund, we're expecting that this one's going to fill up fairly quickly. So definitely be sure to jump in there, get a free account. That way you can be on that list of first to know when it does roll out. Lastly, guys, if you happen to be in the Tampa Bay area, I love meeting others that share the same passion for real estate and business as I do. And so if you have some time while you're here visiting, be sure to look me up. Let me know when you're coming into town, and let's see if we can coordinate our schedules to get together. Again, my email address is my personal email, so you can just shoot me a message and let me know when you're coming, kevin@kevinbupp.com. And again, we'll try to coordinate a time while you're here. Now, without further ado, I'd like to welcome our guest for today's show, Brian Brunkhorst. Brian, how you doing today, bud?
I'm good. How you doing, Kevin?
Oh, I'm doing fantastic. I'm doing even better now that we're here on the phone together. And Brian, as I had mentioned before we started recording here and doing the show today, I've had many different types of businesses on our show. Mostly real estate related, but we've had lots of very unique niches. But the one that I have not had is laundromat. So I'm super excited to talk to you about your business. I've never owned a laundromat. I've never even looked at one as far as an opportunity. And so I'm very interested in peeling back the layers and kind of opening up the hood a little bit, looking inside and seeing what that business looks like. But before we really dive into like the meat and potatoes of it, maybe if you could, Brian, I gave a little bit of an introduction to you, but I'm sure it's a lot more expansive than that. So take a few minutes, tell our listeners a little bit more about your background and how you got started in the laundromat business.
Sure. Laundromats has always been an interesting, kind of business that I thought about when I was young. I was in college, and a lot of times college kids have to use a laundromat to do their laundry. And one time I was in the local laundromat by San Francisco State, and the owner was walking around with a cart and a couple 5-gallon buckets and emptying all the quarters into these 5-gallon buckets. I couldn't believe how much money there was. And, as a poor, starving college student, I just kind of tucked that one away, saying that would be an interesting business someday. Fast forward several years and kids and family and careers and all of that, I wound up being an engineer in Silicon Valley, a hardware and software network engineer, testing networking equipment for large data centers and data center control type businesses that would manage the data centers. Pretty technical stuff. Working at startup companies, very cool, lots of fun. Then one day, and I'll never forget it, back in, we'd just come back from our Christmas break, the vice president of engineering calls the entire engineering department into a conference room, and he says, everybody welcome back from Christmas. I hope you had a great Christmas break. I've got bad news for everybody. Our company is going out of business. And at the end of the month, this was the beginning of January, he says, at the end of the month, we're all losing our jobs.
Oh, gosh.
And that went over like a bombshell.
Happy New Year, right?
Happy New Year. There was about 60 of us in the room, and we're all like looking at each other. He says, don't worry, we're going to bring in some headhunters and try and, help you guys get your resumes together and all that. But I went home that night, and for me, it was a paradigm shift because I always excelled in my work ethic, and I always excelled and thought that by working hard, you'll always be above the cut line. But if the cut line is everybody, there's no way to be above that. Yeah. And it was really a paradigm shift for me, and I realized that the only way that I was going to be able to control and have, quote unquote job security was to work for myself. And so at that point, I went and, went home and broke the news to my wife. And we started thinking about, all right, is there a business that we could go out and buy that would generate enough cash flow to cover our basic needs, that if either of us were to ever be laid off again, we don't wind up under a bridge or something like that. And that was the whole intent and purpose when we first got into owning our own business. And we looked at a whole bunch of different types of businesses. we evaluated a dozen different types of businesses, from restaurants, sandwich shops, to dating companies, to maid service companies, a blind service company where you go in and you'd have a territory, you'd go to people's homes and sell them blinds. The one thing that struck me, though, was with all these types of businesses, I would pay anywhere from $100,000 to upwards of $1 million, and then I'd have to work in the business full time. It was a full time job, so I was essentially buying myself a job.
Right.
and I already had a career, right? I loved the engineering stuff. That's what I want to do. I don't want to buy a job. I just want a business that I could run part time if possible, right? And then I went back and I thought about that guy with all the quarters at school. And I said to myself, he's not there most of the time I go to that laundromat when I was in school. I only saw him once in a while. So if he's not at the business all the time, obviously he's not working full time in the business. So it's a part-time business. And so I started looking into laundromats a little bit more and realized that it was an incredible opportunity. And once we fixated on that and I started learning enough about the laundromat business, I went ahead and we bought our first laundromat in 2003.
Okay. Was that
from there?
Did you get another job? I mean, did you find another engineering
Well, I was
position?
out of work at the time.
Okay,
right?
so you bought that business while you're out of work.
Yeah, so I got laid off. I spent 6 months trying to find the business that I wanted to, and I made all kinds of mistakes, right? Because at the time there was really nothing online. There was no books really that would teach you how to find, evaluate, or purchase a laundromat. And so I was kind of, doing it old school way, and I made a lot of mistakes. I did go to some trade shows and that kind of thing, and learned as much as I could, but there was a whole bunch I didn't know. I wound up buying my first store in 2003. I spent $28,000 too much for the store. The store was supposed to be grossing $5,300 a month. It was really grossing $4,200 a month. It was supposed to cash flow like $2,500 a month, and it was only cash flowing like $1,500 a month. So I way overpaid for the store. but it had a lot of potential. And what we did with that first store, it was, one of those businesses where you buy the business, but you don't own the property. So it's a leased property. And I did a couple things right. The first thing I did right was I got a fantastic lease. I at least knew enough about real estate, because I had done a lot of real estate investing prior to buying the laundromat. That if you're going to buy a business, you want to have a great lease on the business. Just like if you own rental property, you want the lease to be great on your side, and not so great maybe for the tenant. So I kind of knew what to look for with that. And so I got myself a great lease, and we literally remodeled the laundromat, and I owned it for about a month. We closed the laundromat, completely remodeled it, opened it up 6 weeks later, and then another 6 weeks passed, and I got another job, and I went back to work.
Oh my gosh, what a whirlwind!
Right. So it was good, because at that point, once I remodeled it, I hired like a couple of people to be an attendant part-time. So they just come in a few times throughout the day and clean the store and make sure that customers are happy and that kind of thing. And I went about just doing my thing, went back to work, and I after I got all the systems in place and everything, I was to run that store properly, it took me anywhere from 10 to 15 hours a week.
Okay. Yeah, I was going to ask about the personnel needed for a store that size, and so give us something to work from as far as, I mean, how large was this actual first laundromat? As far as square footage is concerned, or number of machines, I don't know the best way to quantify the size, but give us an idea of that, as well as the personnel that it takes to run something like that.
Sure. So the first store was my store in Hayward, and it's 1,500 square feet in size. It's part of a strip center that has two other businesses, a liquor store, and there's like a barber salon in there. And so it takes up I'd say about a quarter to a third of the center. It's a little L shape. You can picture like a little L-shaped center with parking on the inside of the L. Mm-hmm. And it's on a corner lot. And in the neighborhood, it's a lower middle class to poorer neighborhood and the side street, and it's on a major street, and then the side street goes down. There's a bunch of apartments down the side street, so it's right on the corner there.
Okay.
So location-wise, it's a pretty decent location in the city of Hayward. Demographically, the area has a large Hispanic base, and also a fairly large African American base, but more Hispanic than African American. The reason why people always go, well, how many Hispanics are there when they think of laundromats, is because Hispanics tend to have large families. Mm-hmm. And really what you care, it doesn't necessarily matter the race, but it matters more what's the housing, the population density, number of people per household in the area. And so this had a fairly decent number of people per household. It was over 3 people per household, which is good.
Okay. Was this a 24/7 laundromat, or was it open set hours?
It's open set hours, so it opens at 7 and closes at 9 o'clock.
Okay. And 7 days a week?
So 7 in the morning and 9. Yeah, 7 days a week.
Okay. And then your staff to run the location, what does that look like?
Sure. Well, when I first got it, it didn't have any staff at all. In fact, the store was so run down, it didn't even have a working change machine in it.
Oh,
People had to go next door to the liquor store to get change. I mean, totally mismanaged, totally run down. It has a whole bunch of top-loaded washers, and only a couple larger washers for like bedspreads, and that was about it. Mm-hmm. Once we remodeled it, we put in a whole lot more larger capacity machines. We just about doubled the capacity. We got rid of all the top load washers, put in all front loading type washers of various sizes, and a lot more larger format machines too, because I felt like there was a need in the neighborhood that wasn't being serviced by a laundromat that has no money and has a bunch of small machines, when the households in the neighborhood are larger families. So that just didn't make a lot of sense to me. Mm-hmm. And I later found out that there's actually formulas and stuff to figure out how big of machines you want to get, depending upon the demographics of the neighborhood.
Interesting.
But of course, by then, but at this point in time, I had no idea any of that stuff. I just figured there was a lot more hair on the deal than what was being presented by this poorly run store. Mm-hmm. Okay. So I bought the store. As far as employees go, there weren't any employees, but then after we remodeled, I hired a couple of this couple who managed one of the apartment buildings down the street, and I had them come in like 3 or 4 times a day for like an hour or 2 each time, just to clean the store and help any customers that were in the store or answer any questions for people and that kind of thing.
Mm-hmm.
So staffing wise, I would say maybe 4 to 6 hours a day.
Okay, got it. And so with this first,
and I pay them like a little bit over minimum wage.
Okay, fantastic. And this first location, you had mentioned that that you lease the space there. Is that your model throughout the other 4 locations that you have, to where you just are leasing the space?
Currently, well, in the San Francisco Bay Area, it's really hard to find commercial space.
Yeah, that makes sense.
And that has a laundromat in it. And I'll tell you, that's an important piece of the equation, because you could buy a building, but as an example, in the city of Hayward, they have what they call sewer impact fees. And it's not just in Hayward, but it's all over the country.
Yeah.
But in the Bay Area, it's very prevalent. And those impact fees that the counties and the cities charge are usually based on how many washers you're going to hook up to their sewer line. Mm-hmm. And in the city of Hayward, they charge $3,000 per machine.
Oh my gosh! And so it's cost prohibitive for you to open up a new location. Is that what you're getting at? Something that wasn't pre-existing?
I mean, if you've already got a building that has a laundromat in it, those fees have already been paid. So remodeling it, you don't have to worry about that. Mm-hmm. But if you were to buy a building that doesn't have a laundromat and you want to put one in, then you're going to be subject to those impact fees. And so it turns out to be a good thing and a bad thing, right? It's a bad thing if you own a piece of property and you want to put a laundromat in it and it hasn't had one before, and the city that you have this property in has high impact fees. Mm-hmm. But from a business point of view, it's good because it creates a barrier to entry. Yep. Otherwise, you'd have laundromats on every corner.
Yep.
And the profit would go down significantly.
Mm-hmm. No, I love that. I mean, it's kind of one of the reasons why we're in the mobile home park business. There's a massive barrier to entry to get into our space because municipalities do not love our niche, and so they do not permit them to be built. And so we're in one of the only, in fact, I think we are the only real estate asset class as a diminishing supply, which is quite interesting because affordable housing is on the rise. And so there's a massive supply-demand factor working in our favor versus against us because of that big barrier to entry to build new mobile home parks, which it sounds like is very similar to your business as well. And so that, I guess that takes me to the next question, or more so, I think I might know the answer, is the other 4 locations. Did you purchase existing laundromats? Is that what you did? Just took over existing laundromats and rebranded them?
So with 3 of them, I did. Okay. My 5th store, we wound up actually, the location was so good, and our business was so good from the other 4 locations that I could afford at that point to take the risk and open a very large store. That's our largest store. It's 3,800 square feet, and it's the building is in an old Yardbirds building, which Yardbirds, I don't know if you remember them, they were a national brand like a Home Depot or a Lowe's, 40,000 square foot building. And we take 1/3 of the frontage of that building. So we have a really nice piece right in front of the building, one corner of the building. And the rest of the building is being used by a grocery outlet, which is a grocery chain that has lower priced groceries than your typical Safeway type.
Okay. So,
but it's really good because the location was there, and the city that we put it in didn't have a lot of impact fees. So we took a flyer on that, and it's worked out pretty well. Okay,
fantastic. And talk to me about the types of financing that might be available for this type of business. Is it majority SBA type of financing, or is there other debt available? Or I guess another part of the question is, I'm assuming owner financing might even be a big type of common structure in this business when you got a mom and pop that are looking to get out of their existing business or selling off their laundromat. So can you speak to that a little bit? Just the debt overall, what type of options someone has available?
You bet. So the first laundromat that we bought, we just paid all cash for it, and we didn't finance it. But one of our other laundromats we wound up financing, and that store was a 3,000 square foot store, and the cost of that store was $350,000 for the business. And I didn't have $350,000 at the time, so we wound up financing about $200,000 of it, and so we went and got an SBA loan, and we went through the entire SBA process and got approved for the loan. And then the SBA is kind of funny, and you may be familiar with this. They don't really tell you all the terms until you get to the very end of the process.
Oh gosh, I've never done one, so no, I am not familiar. But please tell.
So we get to the very end of the process, and they say, "Okay, congratulations, you're approved. All we need to do is we need to put a lien against all your other rental property.
Oh gosh,
but not your home." And it's like, no. If you'd have told us that up front, we never would have gone down this road, right?
Wow. Yeah.
So they wanted to put a lien against 12 of our rental property, and that just wasn't going to happen. So then we kicked that to the curb and privately financed that one. But as far as other types of financing available, right? So SBA will loan if the business is profitable and has a good set of books, and shows year-over-year growth. Those are the things that the SBA is really looking for. Then there are manufacturers of equipment that will do, and as well as a couple other private lending companies that lend in this space. One is a company called Eastern Funding. And they're based out of New York, and those guys will lend on a buyout of a business as well. Usually, the equipment manufacturers, they will, if their distributor is brokeraging the deal, they will lend on it because their distributor's brokering the deal. So there are financing available. Typical terms obviously would depend upon someone's credit as well as their experience in the industry. Usually first-time people, they're looking for around a 30% down, financing 70%.
Okay. And that's typically over like a 15-year amortization term, 15 or 20-year?
Oh, yeah. Oh, good question. Yeah, it's more like 7.
Wow. Okay. That's quite aggressive.
But the good news is, the cash flow on these businesses is so good that usually the stores will cash flow. If it's an existing business, you're buying the cash flow, and typical returns are before debt service is somewhere around 20 to 25% return.
Is that? I'm assuming that's leverage. So that'd be leveraged with the type of debt you just mentioned.
No, that would be if you pay all cash.
Wow.
Right. So as an example, I'll give you an example. Let's say you were going and you had a laundromat that was generating $11,000 a month of gross income, and after all the expenses was netting $4,000 a month. Most places in the country, that laundromat would probably be worth about $200,000, or about 50 times the monthly net income.
Okay.
And that, of course, is before debt service. So that's as if you were to pay all cash for it.
Okay, so
now
I'm guessing that just doing quick math on that, I'm sorry to interrupt you there. So just doing quick math on that, I would assume like if you're just going to do a rough back of the napkin sketch, like if I went on buybizsell.com, which I'm sure I could find a bunch of laundromats for sale, I could just use a basic rule of thumb from gross and apply maybe a 60 to 65% operational expense ratio. I mean, is that kind of the ballpark figure what I might expect to pay as far as overall expenses are concerned operating the business? Taxes, insurance, payroll, repairs, maintenance, reserves, prior to debt service, obviously. Is that what I might expect to pay? Is that kind of like in the mobile home park space, I could say that typically between 30 and 40% is what the normal mobile home park should be operating at. Not saying that they do. If they're operating it correctly or inefficiently, then they might be much higher than that. But typically about 30 to 40% expense ratio.
Exactly. So there's a range, right? So they're going to. Most laundromats will make anything from breaking even to, but if they're operating properly, they should be in that range, anywhere from 30 to 40% cash flow from gross operations.
So gross profit margins, got it. 30 to 40% gross profit margins, got it. Fantastic. Well, that's quite attractive. Those numbers work.
They work okay. Well, there's some interesting things about the laundromat business too, right? Remember, it's an all-cash business.
Mm-hmm.
And so you have no receivables. The customers do all the work. They put the clothes in the machines. They wash, they dry, they fold. They do all the work. You don't have to worry about, debt collecting or anything like that. And it's a business that can be run part-time. And it fulfills a basic need for society, having clean clothes.
Yeah, no, that's fantastic.
So it's somewhat recession resistant.
Yeah, no, that's all great. So I've got some more specific questions I want to ask you, if you don't mind, Brian. One would be ideal locations, like when you guys are out there searching for your sixth location. Give me the bullet points as far as demographics, traffic counts, median household incomes. I know you said something about overall population density. That's important. I'm assuming proximity to apartment complexes is important. Maybe not to Class A apartments, but probably to Class C and D apartment complexes, right? The ones that were built back in the the 70s and 80s and maybe earlier than that, that might not have washer and dryer units inside them. So if you do you have like a top 4 or 5 criteria that literally it has to fit within that box, or else you move on based on a location?
Sure, absolutely. So you want to have a location that is near a neighborhood that is lower to lower middle class income. And typically, we look at the majority of our customers are going to be renters. So apartment buildings, older apartment buildings are better than newer ones, because anything built after 1975 probably has some sort of laundry facility inside. So older neighborhoods are better because the older ones don't have laundry facilities inside. Brand new apartments these days, they put the washer and dryer hookup right in the apartment, in each individual apartment. So they don't give you, so it's more like a home where you wouldn't be able to pull as many renters out. Now, that doesn't mean all renters have washers and dryers, even if they have the hookup. But that's something that we look at. You don't want to be, you do want to be on a major thoroughfare if possible. I don't have traffic counts or anything like that, but just, the major arteries of the city are good. But like that Hayward store where, it's on a corner, and it has, that side street is feeding that neighborhood that all your customers are going to come from. That's what your type of thing that you're looking for. The draw on a typical laundromat, depending upon what part of the country, well, depending upon how big the city is, right? If it's a large metropolitan city, the draw could be anywhere from a couple of blocks around the laundromat to a mile and a half max. That's it. If you're in a more rural area, it could be several miles, 2 or 3 miles or more in the country. So that all being said, you look at how much competition there is around you. If you're in a major metropolitan city, think of LA as an example, you might have within a 1 mile radius 20 laundromats. There's heavy competition, but there's a lot of people that live there too, right? But so in that particular case, you're really only drawing from maybe a block or two. The other big thing to think about, and most people don't think about this, is parking is an incredibly important part of the equation for location. If you don't have adequate parking, you're going to limit the amount of business your store can do, regardless of how big it is. Because people aren't going to schlep their clothes 3 blocks, to your laundromat. They want a parking lot right in front of your laundromat. Otherwise, it's wherever they can walk from. A block maybe, down the street in a shopping cart that they've stolen from the supermarket. That type of thing. I mean that honestly happens.
Yeah, sure.
If I would say, the biggest piece, aside from being close to that neighborhood where you're servicing, would be to have good and adequate parking.
Okay. Fantastic. And a few other questions I want to ask you, if you don't mind, Brian, regarding just owning one of these facilities. Do you typically own the equipment, or is it a lease arrangement? What's the most common scenario?
The most common scenario is that you purchase the equipment. Okay. And you can finance it. And in fact, usually, because this business has got such a high success rate, where most businesses, you've heard the term, most businesses, within the first 5 years, 90% of most businesses fail in the first 5 years. And in the next 5 years, 90% of the ones that survive the first 5 years fail. The laundromat business is almost inverted of that. Almost 90% of laundromats succeed the first 5 years.
Wow.
So you think about that. That's a huge statistic. There's very few laundromats that fail. 1 out of 10. That's a small number when you compare it to other industries.
That's impressive.
So,
that's impressive to me, because I would tell you that a large majority of business owners that start out might have the best intentions, but they just tend to be bad business people, and typically that's why their business might fail. Whereas it sounds like here you might be able to make a few mistakes and still recover without going out of business. You might not have to be the best business owner to make one of these succeed.
Exactly. But the reason I point that out is because the statistics on these are so good, the manufacturers of the equipment will essentially loan almost all laundromat owners. They'll loan them the cost of the new equipment plus the cost to install the new equipment, 100% financed.
Wow. So really, your responsibility as the laundromat owner, assuming you were going to either take over an existing laundromat and retrofit it with new equipment or start a new location, would be really just the physical build out of the space, which I can't imagine is really all that much, right? I mean, it's probably more so the equipment. The equipment is the majority of the cost. Would you agree with that?
Well, yeah. So it's funny. A lot of people underestimate the build out expenses. If you're not buying a business that's already established and you wanted to build it from scratch, it's actually a pretty complicated process, much more so than most people think. You are right. The vast majority of cost is the actual equipment. You have a lot of equipment expense, which is a great thing because, one, it's financeable, but the other great thing is you have big tax deductions.
Yeah.
Because you get to write it off.
Yep.
So that's really nice. But the complexity of building out a laundromat is surprising. It's not like a retail clothing store where somebody can just roll in some racks and install some security cameras and a cash register, and you're good to go. You're cutting floors. You're dealing with sewer lines. You're dealing with gas and electrical and water lines run to every washer, and gas lines run. The gas lines run to every dryer, and electrical run to all the machines. Electric and water and sewer running to all the washers. Boilers and lighting and all of that. It's the build out can be expensive.
Sorry to interrupt. Is there like a general rule of thumb for like price per foot that you would like $60 to $80 a foot for the average size stores? What you would expect as far as build out, not including the cost of the equipment, but just the build out of the facility, or is it much higher than that? That might be hard to answer too. Yeah.
Yeah, I've never thought about it in those terms. The build out, I can tell you, the build out typically is almost 40% of the cost of the entire process. So like, if you're going to spend $1 million to build out a store, maybe $400,000 would be the actual build out piece, and then $600,000 would be the cost of the equipment.
Okay. Like these, if you don't mind me asking, you don't have to answer. You can tell me no, but give me an idea what it costs you. Since you built one location pretty much from scratch, not including the real estate, cost. But what was that? Do you know what that store, equipment and physical interior built out?
Yeah, that's right. Yeah, that store was $1,007,000. So just over $1 million to build out that store. Okay. And like I said, it was about $600,000 in equipment and about $400,000 to build it out.
And that was 3,500 square feet, right?
3,800. Yeah.
Okay, so about $105 a foot. Yeah, about $105 a foot. So much more than what I even expected. Okay, which could vary on different parts of the country. Cost of labor, cost of material, things like that.
Absolutely.
Okay, so. As far as management, I want to talk about scalability of this business model now. Having one location, you were still, and you could be working a full-time job today. I didn't ask you that, but just generally speaking, one location you mentioned, once you actually have those couple part-time personnel there that come a couple hours each day, you said maybe your side of it, like your responsibility would have been somewhere between 10 and 15 hours a week, and that's once that facility was stabilized. Obviously that the scalability of that, now you've got 5 locations, now you're talking 50 to 70 or so hours a week. At a certain point in time you run out of your own personal man hours, and so talk to me about the scalability of this business. At this point in your business, you got 5 locations. Do you have something along the lines of like a district manager, or do you have additional staff that help you oversee each one of these facilities? And if so, is that internal, or do you outsource? Are there companies out there that actually handle the property management aspect of laundromats?
Those are great questions. Well, for us, there is some scalability that you can do. Not a ton, but there is some. And what we do is most of our stores are fully attended. So that means we'd have an attendant from when the store's open to when the store closes. As the business generates more income, you can afford more staffing. So What we also have is we have somebody now that we call it our facility manager, and he goes to all the stores, and any maintenance that needs to be done on the buildings and the facility, whether it's linoleum coming apart or there's painting that needs to be done or the parking lot's a mess and needs to be cleaned, whatever from a facility's point of view he takes care of that. Then we also have a repair person that and they work part-time. The facility manager, he works part-time, so he's putting in maybe 20 hours a week. I've got a repair guy that works part-time that puts in maybe 10 to 15 hours a week, and he goes around once a week to all the stores and make sure all the equipment is running properly and fixes anything that's not. And then I've got a store supervisor who manages all the staff. We have almost 30 employees now, amongst all of our stores.
Okay.
And so she hires, trains, and manages the staff, as well as answers all the phones. And so she's working full time. Then we've got bookkeepers, and so all of a sudden, a one little store, you can kind of do everything yourself in 10, 15 hours a week. But as you grow, all of a sudden now you generate a whole lot more income, and you can afford, and you should, you can't do everything yourself, right? So you should start hiring stuff out and start finding pieces of the work that you used to do to have other people do. And that allows you to continue to expand and grow. Mm-hmm. And so that's what we do. We keep finding other jobs that we're doing that we can hire somebody else to do, and that allows us to back out of the business now even more. Right now, both my wife and I are retired from corporate America. I didn't tell you, but my wife was an office manager at a startup company as well. And we bought our first store in 2003. By 2006, that store was completely paid off. So
wow.
Within 3 years, it was completely paid off. Because when I went back to work, we didn't need the money. So we just
didn't accelerate it. You dumped it back in.
or just dumped it right into debt service.
Yeah.
And so we just retired the debt within 3 years. The other thing that was interesting is when we bought that store, it was doing, I told you, like $5,200 a month. Within 6 months after the remodel, it was doing $10,600 a month, and it was netting $4,500.
Wow!
And that store does over $17,000 a month now.
Wow!
And it's netting a lot better than $4,500 too.
Yeah, okay.
But anyway, after we retired the debt service, we looked at the income that the store was generating, and it replaced my wife's salary. And at the time, we had three small kids in elementary school. So I said to my wife, I said, so do you want to keep working, or should we use the money that's generated from this little business, this little money machine that we've got, and be a stay-at-home mom? Well, it wasn't hard to convince her to be a stay-at-home mom.
Very cool.
And for me, the light came on. It's like formula. I love formulas. Mm-hmm. Formula.
You're an engineer. Yeah, that's how your brain works, right?
Right. Pay it off, quit your job. Well, I made more than her, so that's why we bought our second and third laundromat, because 2 years after we bought our second and third laundromat, those were paid off, and I was able to quit my job as an engineer. And at the end of 2008, I walked away from my job in Silicon Valley, and haven't looked back.
Very cool. I love that story.
And so, so currently right now, between my wife and I, we each put in, I want to say, between 20 and 30 hours a week between the two of us, each of us. And my wife kind of handles the back end stuff, human resource side of things, paying the bills and that sort of thing, and and then I go to the stores a couple days a week, collect the money, because I still don't have somebody to collect the money for me while I'm here. I feel more comfortable with that. While I'm not here, and I go out of town, and I do that a lot, we have our store supervisor take over those responsibilities, and she collects the money too. To give you an idea of how our lifestyle has changed a little bit, because that's always fun for people to wonder, well, what kind of lifestyle would a guy with a laundromat have after a few years. Well, in 2010, my wife and I discovered cruising. And since 2010, we've been on about 28 cruises.
Oh my gosh. That's a lot of nautical miles.
That's not the only type of, it's a lot of nautical miles.
Yeah.
That's not the only type of vacation we go on, but just can you take a vacation, a 7-day vacation or a 10-day or 12-day vacation? Yes, you can.
Yeah.
And your business will run as long as you have the right processes in place.
Yeah.
So it's been a pretty amazing ride, and every time I want a pay raise, I just buy another laundromat.
Yeah, very, very cool. So I know we're running out of time. I know we're running out of time, and I really want to be respectful of your time. But there's 2 last questions, and I promise I'll make them quick, and
Sure.
And I won't hold you up the remainder of the day, Brian. But the first one is, and it wasn't a question I was thinking of asking, but now you mentioned something that made me think about it. Is when you collect the money yourself, except when you go on vacation. And I'm assuming you have a very trustworthy staff individual that goes and collects that for you. So, but with that being said, as far as an industry whole, is theft a big concern for operators? Being that it still largely is a cash type of business. Whereas, like, for example, I interviewed a few car wash guys over the last couple of weeks and months. And, 20 years ago, the car wash industry was majority cash. I mean, it was coins. It was like those drive-in self-service. You get the wand, you put $1.50 in quarters in, and that was the normal car wash business. Now, the car wash business has morphed into something completely different. Those old school ones still exist. But for the most part, the more common scenario now is some type of express car wash, which has more of a automated component to it, and for the most part, does not accept cash. It's it's credit. You have to have a credit or debit card, and so there's not really an attendant there, and so theft goes away greatly when there's no cash being exchanged. But you don't have to worry about that, right? It's pretty easy to control. It's electronic. Right. But as an industry whole, is that still alive and well? Is that a huge concern for those operators that want to scale and open up additional locations as far as hiring staff to go, handle those money collections on a daily or weekly basis?
Well, I mean, so theft, there's 2 pieces to that puzzle, right? And by the way, the coin laundry industry is starting to do the same type of morph, right? So most of my locations also accept debit or credit card. Okay.
On the machines, is it like directly on? Is it directly on each machine, like that you can slide a card and run the machine?
Yeah. In some of the stores, yes, it's directly on each machine. In other ones, it's like a kiosk, kind of an Arco type deal, where you tell what machine you're using. But and we even have some where you can pay over your phone, right? So, I mean, it is morphing, but there's still money in the machines. So the actual cash box on each machine, they're like little vaults, right? And the manufacturers build these things really, really tightly spec'd, so it's very difficult to break into them. And it takes a long time. And if you have an attendant there, somebody's not going to really be able to break into each individual washer to get, $50 or something like that with the attendant sitting there, right? It's very low risk as far as that goes. And even the unattended stores, and I have an unattended laundromat where we just have somebody coming in once or twice a day to clean, and that's it. I really don't have any problems. In 15 years, I can count the number of times out of all my stores, the number of times I've actually had machines broken into on one hand.
Wow. Okay, that's good.
And our operations right now, we're grossing over $2 million a year, and my total loss over 15 years is less than a couple $1,000s.
Well, that's fantastic. Okay, I like that. That sounds good to me.
so the numbers are very low, right? That doesn't mean it can't happen. No, it certainly could, right? I've had people break into the laundromat in the middle of the night. Insurance covers a lot of it too. So, it's more of a nuisance than anything else. It happens very rarely.
Got it. Okay, fantastic. Well, now, Brian, we're going to round things out for the day. You've shared a lot. This has been fantastic. I'm sure I could literally questions will keep popping in my mind. So I'm going to be respectful of your time. But we've covered a lot of ground, I think, in the short time that we were on the phone. But I'm going to enter into what I like to call the golden nugget segment of the show. And this is where we're going to again kind of wrap things up for the day. And what I'd like to ask of you is if there was one last final golden nugget of advice or wisdom that you could leave with our listeners that may inspire and motivate them as they progress in either their business or real estate investing career, what would that one last final golden nugget be?
I would say to pick a business that you can enjoy and be passionate about. Don't just do it for the money, but try and create a positive impact on the community that you serve, because it's not all about the money. It's more about helping others, and you'll get a lot more out of your business, and you will live a much richer life if you do that.
No, I love that. I'm a firm believer in being a servant and giving back to whether it be the local communities or charitable organizations, but not just taking your wealth and sticking it in your own bank account and being selfish with it, but using it to better the lives of everyone around you and the world in general. So, but I think also the important another point that you just mentioned there regarding. Actually find a niche, and this could mean that it's laundromats or it's self-storage or it's mobile home parks, and that's one of the reasons I do this show is to expose our listeners to all these different niches of making money. And I know that laundromats isn't necessarily it's not a real estate class, but there are components where there's real estate involved. Like your one location, you actually own the physical real estate. And so when you go to sell that location, I mean, that really could be, that is a real estate play in addition to a business play. It's kind of a combination of the two. But in any event, the idea is that you find something that you can actually have a passion for. And it's funny because I get giggles, Brian, when I tell someone that I'm actually passionate about mobile home parks. And it's not just that I'm passionate about mobile home parks. I'm passionate about providing quality, clean and safe, affordable housing to deserving families. Like that. That's really what our business model is all about, and I find great joy in doing that. I mean, it's obviously financially rewarding, but we're also bettering the lives of the families that we provide housing to, which is a pretty cool thing. So it's pretty easy for us to get passionate about that. It just happens to be mobile home parks, right? So,
yep. There you go.
Well, Brian, I really appreciate you taking the time to come on the show today. And for those that want to learn more about Brian and his company, they can go read more about him. And he's got some great free resources on his website, which is buyalaundromat.com. That's BUYALAUNDROMAT.com. Buyalaundromat.com. Brian, that's all we have for today, my friend. Really appreciate you coming on the show, and we'll look forward to staying in touch. Kevin. Okay, you take care. Have a great day.
Thank you, Kevin. Have a great day.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com, and we'll see you next Monday morning.